Because there was no formal Wall Street consensus for BingEx this quarter, there was technically no beat or miss, but the Q2 numbers just dropped. Revenue hit 940.3 million RMB. GAAP EPS came in at a loss of 0.51 RMB per share, and while management offered zero forward guidance.
Right.
Yet, despite the top-line drop and that net loss, the stock actually popped 6.84% right after the report to $2.03.
I mean, imagine reading an earnings report, you see shrinking revenue, absolutely zero guidance, and then you just watch the market shear. So today we're unpacking exactly why investors bought into this seemingly ugly print and what the latest equity reports say this means for your portfolio.
Yeah, let's stop right there because looking at these financials, BingEx is operating in the middle of a brutal Chinese logistics price war.
Definitely.
Revenue fell 8.2% year over year, and gross margins are squeezed all the way down to 10.2%. So why on earth is the market rewarding a company that is visibly losing ground?
Well, it really comes down to separating the paper losses from the actual cash generation.
Okay, how so?
So that headline, GAAP net loss of 34 million RMB. It was heavily driven by a 41.7 million RMB fair value hit on their long-term investments.
Oh, I see.
Meaning, the investments they hold lost value on paper, but they didn't actually burn that cash from their day-to-day operations. If you strip that non-cash hit out, their non-GAAP net income actually stayed positive at 11.4 million RMB.
Wait, really? So the core delivery business is actually still making money?
Exactly. The engine is still running.
Okay, but they're still stuck in that race to the bottom price war, right? Like a leaky bucket.
Yeah, and that's exactly what management is trying to fix right now. A major catalyst this quarter was BingEx signing the Hangzhou Self-Discipline Convention.
The what convention?
The Self-Discipline Convention. It's essentially this regional pact among rival logistics companies where they all agreed to just stop bleeding each other dry with heavy discounts.
Oh, wow. Okay.
Yeah, the explicit goal there is to shift competition away from price and push it back toward service quality and reliability.
It's like a budget airline suddenly deciding to sell first-class tickets. You can't just hike the price and expect loyalty. You actually have to put in bigger seats and, serve better food.
Right. You have to earn it.
So how is BingEx actually upgrading their service to convince customers to pay up just for reliability?
They're proving they can do it by winning over high-value segments. Enterprise client signings jumped 53.1% quarter over quarter.
That is a huge jump.
Right, because these are businesses moving like store inventory or super urgent legal documents. They don't care about saving a few cents on shipping. They care about absolute fulfillment certainty.
Makes sense.
And to guarantee that, BingEx deployed AI systems that now handle about 85% of routine customer inquiries. Think automated package rerouting or just simple tracking updates.
Oh, so that frees up the human agents.
Exactly. It boosted their customer service efficiency by 30%. So human agents are now completely free to handle the high-touch critical enterprise issues.
But delivering premium service requires physical speed, too. You can't charge enterprise prices if those urgent documents are just stuck in Hangzhou traffic.
That is exactly where the drones come in.
Drones?
Yeah, drone deliveries surged 169.3% quarter over quarter. They're now operating across 22 low-altitude routes.
Wow.
To give you an idea of the impact, they have this cross-river route in Hangzhou that literally cut delivery times from over 40 minutes down to just 13 minutes.
13 minutes. Okay, so slashing costs with AI and then bypassing traffic entirely with drones, that definitely explains the enterprise growth.
Yeah, and management clearly believes this pivot is working because they are putting their balance sheet to work.
Right, they're sitting on 853.4 million RMB in cash, right?
Yes, and they're actively executing a $30 million buyback program. They've already scooped up 3.9 million ADSs for about $11.8 million.
So they definitely have the capital to fund this transition. But I have to point out there is a massive blind spot here for anyone buying into this whole drone narrative.
Oh, absolutely. The regulatory side.
Right. Because they are making these 13-minute deliveries work right now because they have local airspace approvals in Hangzhou specifically.
Yeah, it's very localized right now.
Which begs the question, what happens when they try to expand? Are other municipalities actually going to let commercial drones just fill up their low-altitude airspace? Or is BingEx about to hit this invisible regulatory ceiling?
It's a great question, and it's honestly the ultimate test for their primary growth driver going forward.
Definitely a ceiling you need to watch out for. Thanks for joining us on this deep dive. Make sure to follow the show for your daily earnings coverage.